Did you know that a simple strategy hit 100% win rate with a $45,000 in profit in 2024, trading a single Nasdaq futures contract? Yes, you heard that right. In 2024, no curve fitting, one pattern, one filter, one exit, and you have a great strategy. And the best part, even in this insane 2025 22% drop in Nasdaq, the strategy is still holding and profitable. Sounds too good to be true? Stick around and I'll show you the strategy, and I will even give you the code for free. The strategy is based on something called IBS. And no, it's not what you think. Although, to be honest, watching this market can definitely give you IBS. But in trading, IBS stands for internal bar strength. It is one of the simplest, most underrated signals and filters that I ever used. IBS measure where the close sits in today's range. Here is a representation of what the IBS pattern looks like. So here on the left, I have a candlestick with the high, low, the open, and the close. And it's denoted in green because it's an up bar where the close above the open. On the right side here, I have the opposite where the close is below the open. So usually it's a red bar. So IBS measure where the close sits in the whole bar. And this is the equation, the close minus the low divided by the high minus the low. So this equation will result a number between 0 and 1. 0 means the close it's at the low, and 1 means the close is at the high. So for example, if the IBS is 0.25, that means the close is in the bottom quarter of the range. And regardless where the open is, we know that the close is in the bottom quarter. So this equation does not pay attention to the open. So when the IBS reading is below 0.25, that means the market is closing in the bottom of its range. And that is usually a good setup. Think of it this way. If the market is puking near the close today, there is a good chance that it will reflex bounce tomorrow near the close. And that is our setup to enter. You see, most beginner traders chase breakouts. And we are doing the exact opposite. Basically, we are waiting for the market to panic, to show exhaustion, and that's where we pick up our order. But of course, we need to be careful and not take every signal. And that's where the second step of the strategy comes in. We will add a filter to our strategy to reduce the number of false signals. And usually the best filters are volatility and direction. In this case, I will use the volatility. So we will measure the short-term volatility to make sure that we have enough energy in the market to bounce back up. And the final part of the strategy is the exit. Because we are entering with an exhaustion, we want to get out really quick. And that's why the strategy is very profitable, even in markets like this year, where the Nasdaq is dropping every day like 2%. So no stop loss, no trailing stops, no profit target. We will exit immediately if we are profitable, and if not, we will exit after 1 day. This is not a long-term strategy. In fact, the average holding is 2 bars. So here is the strategy on the Nasdaq daily bars. This is 2024, and as you can see, it's 14 trades up all the way. All of them are profitable. This is the annual period analysis for 2024. As you can see, 100% win rate for 14 trades. The average profit is $3,240, making $45,000 in 2024. And these are the strategy results since 2007. And we can see we've been on a huge run since 2018, where every year we are making a huge amount of money. Remember, this is trading a single Nasdaq futures contract. And look at this, even in 2025, which I'm recording this at the beginning of April, and as you can see, the market was in a huge drawdown, but we still managed to make 3 trades with 2 winners and 1 of them losing. And so you see, it's 3 trades, 2 of them are winners. On average, we made about $1,000. and the result so far is plus $3,000. This is the strategy performance, $200,000 in profit with 10.4 return to drawdown ratio. This is the equity curve and the trade analysis. So 219 trades with about 70% win rate and about $900 on average. These are the examples in 2025. So this is the pattern where the close is in the bottom of the range. Once we find that pattern, we enter the next bar. Now, if we are profitable, then we exit immediately on the open next bar. If we are not profitable, then we only hold one bar and then exit. The reason we are doing this is we are catching the market in a drop. So we will not be right all the time. And we want to exit fast in case the market doesn't go in our direction, which in this case it doesn't. Then the pattern happens again here. So we enter on the open next bar, and now on this bar, we are immediately profitable. So we exit immediately on the open. And then the pattern happens here again. So we enter on the open, and again on this bar, we are immediately profitable. So we exit immediately on next open. Here are some more examples. So this is the pattern again. We enter immediately profitable, we exit. Pattern again. We enter immediately profitable, we exit. Now, why we are exiting immediately once we are profitable? Because obviously if you hold for more bars, you will make more money. The reason I did this exit as a fast exit, because I want this strategy to counteract the other mean reversion strategies that I have in my portfolio. Now notice this strategy is a long strategy. This is not a short strategy. But even then, we can find other patterns that can help our mean reversion strategies do well. Now, I go over many of these subjects with code and analysis in my Algo Trader newsletter. You can subscribe to it for free on the website, and I will share this strategy and its code with the analysis in the next week issue of the Algo Trader newsletter. So make sure to subscribe. And if you like this video, then you will love the next one.